This week's edition of Women's Wednesday, let's take a closer look at the power of financial independence. My colleague Mansi Dave caught up with Ekta Gala, dealer and fund manager ETF at Mirai Asset Mutual Fund, who shares the to-do list for investment for women. What factors should you keep in mind when it comes to ETFs? Here, all these questions and more being answered. Listen in.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this very special episode of Women's Wednesday, an investor education and awareness initiative by Mirai Asset Mutual Fund. This is your host Mansi Dave, and I'm thrilled to be joined by an incredibly talented dealer and fund manager, Ekta Gala. Ekta, thank you so much for joining with us on this special edition where we talk about women investment.
Mansi, thank you for having me on the show.
So Ekta, the topic for today is invest smarter, not harder. And we are going to talk about ETFs for simple long-term investment planning. So my first question will be that when we talk about investment avenues, see there are many investment avenues. But why according to you is ETF a positive investment avenue, particularly for budding investors?
So ETF, as it stands for, is exchange traded funds. Okay, so these are funds traded on the exchange at real prices.
Right.
So if you see a traditional mutual fund schemes where you have a fund manager who tries to aim to the, to get outperformance from a benchmark.
Right.
Whereas ETF invests in this benchmark. So ETFs are replicating the basket of stocks, be it equity, bond, commodity, okay, and tries to align it through your indices.
Okay.
So if you have, for instance, a Nifty 50 or a Sensex 30 ETF, these have a basket of 30 stocks and 50 stocks, correct?
Right.
So the ETF will always try to invest in this 50 stocks and 30 stocks, replicating an index.
Okay.
So as your index, if your index supposedly Nifty 50 goes up by 10%, and your ETF will tend to, match up to that 10% performance over a year, supposedly. And, for new investors, this is a very good option because first of all it is a very low cost option.
Okay.
And the secondly is when you have no clue of where your market is or what your market is and you're new to equity markets, you need to first understand the market risk.
Absolutely.
You have to understand what market volatility will tend to your returns.
Right.
Whether you will have a return, whether you are not going to get a return, you don't know about it. So when you're investing into it, the best possible option will be to go broad-based ETF.
Correct.
Right? So there is an ETF which will track a broad-based indices. You have Nifty 500, you have Sensex 100, you have Nifty 100 also. So when you tend to go into such broad-based indices, you have less volatility. You have a low-cost options, obviously. So when you tend to, so for a new investor who is coming into a market, first he needs to be familiarized with the market by going into a broad-based indices.
That's right.
And then think about once he's okay with it, when he has getting something out of it, he can think about going to other asset classes. There are like sectorial, which is sector specific. Then there is high volatility, which is like a alpha volatility. He can think of going for other perspectives also.
Okay, so is it right to say that ETF is a fund which kind of replicates the index overall?
Yeah. So ETFs actually replicates any indices.
Okay.
It can be a thematic fund also, which has like a 30 stock ETF or a 50 stocks ETF, and an ETF will replicate it. It will never outperform or underperform. It will be in line with your index, and it will try to be matching up to the index that is moving forward. Or
okay, I think that's the beauty, maybe, like you just said, that it will kind of match the indices and be in line with the indices, if not outperform or underperform the indices.
Yeah.
But Ekta, while we talk about ETFs in particular, for any investment asset class, figuring out the right investment asset class is important, but at the same time, figuring out the right scheme is also important. So how should one select the right ETF then?
So choosing a right ETF is a very crucial part. Okay, because there are like more than 500 plus ETFs across mutual funds.
Correct.
In India. So when you have to select an ETF, first you have to understand what is your requirement, what are your objectives, whether you want to be broad-based, whether you want to be sectorial, whether you want to be regional, thematic, or you want to be, matching the strategies of a fund manager. So according to that, you have to understand which ETFs are assigned there.
Okay.
So if you want to be a broad base and you want a long term, wealth creation for you, you can go broad base indices.
Okay.
If you are thinking of, I am inclined to bank or I'm inclined to IT.
Okay.
For example. So I will always select an ETF which is, centric to bank ETF or IT ETF.
Correct.
Which has that kind of stocks, and I don't need to be stock picking them. I am getting a basket of...
A bouquet.
A bouquet,
yeah.
right. Yeah. So that way I will always match up to that kind of sectorial thinking of my objective first.
Correct.
The second comes is my risk tolerance. Whether I want, whether I am I want a more risky product and you want to earn return faster, or whether, I want to be a stable, I have a long-term wealth. I'm okay to, have a slow wealth creation on my book, on my portfolio. So I will always select that kind of risky or non-risky products.
Okay.
So when you're going broad-based, it's always less risky, less volatile. You will always select that kind of an ETF if you're thinking for a long-term vision. If you want short-term, then you want to, play around with the volatility of the market, you have volatile ETFs.
Right, right.
Okay, like you have an alpha ETF, which is very volatile. So you will actually go for such kind of a product, thematic, thinking of your risk appetite. The second comes for ETF is a very low-cost option. Okay, compared to other mutual funds.
Right.
You will, in low cost, I meant like if you are, investing say 100 rupees, you will tend to be, around that kind of a money, which will exclude a bit of expenses, which is for the management of the of the fund. The third comes is it is low in tracking error. It will try and match up. It can be high tracking error also, because it depends on the performance of the ETF that is matching the index.
All right.
So these all avenues help you to select that kind of ETF that you are looking for.
Okay. Okay. So the takeaway maybe from here is first and foremost, understand your appetite and your potential as well as what your requirements are, and then get into the right side of
and
ETF.
you have to think about your budget as well. Your risk portfolio, your expense ratio. So there comes your budgeting, where you are ready to splurge how much for a particular ETF.
Absolutely. Ekta, while we are selecting the investment avenue, for any potential women investor, a takeaway always is to understand the risks as well as the opportunities involved with it.
Yeah,
so when we are talking about ETFs also, what are the advantages and what are the concerns or the challenges which are attached to it?
So when you talk about advantages, see, in ETF, you are always replicating an index, correct? So when you are replicating an index, you have this option whether, I always have this option, of diversity. It can be a broad-based. I can always have a portfolio, like if I'm not still aligned to a fund manager, I can always park my money somewhere.
Okay.
Rather than having a cash drag, I can actually invest that kind of money into a liquid ETF or a money market ETF. If I don't want to be region specific, I can go for an international ETF. Okay, and then there comes like you have low cost option. That's your second advantage. You will always have like the less risk averse ones also, where if you want a balanced ETF, you can have both. You can have an active side as well as a passive side. Then the risk comes is there is always market risk involved in investment vehicles.
Absolutely.
Correct. So that's the biggest risk that will always be into ETFs. Even though people say that there aren't any risk involved in ETFs, but there will always be a market risk attached to it.
All right. So as we clearly see, ETF a positive investment avenue. Of course, any investment is backed by risk as well as opportunity. So one needs to understand their potential, their risk appetite, as well as the budget requirements, and at the same time consider the investment avenue. Ekta, thank you so much for joining with us and talking and giving directions to our budding women investors in terms of ETF investment.
Thank you so much for having me on the show.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.